Hello, and welcome to Pro Trader Strategies Market Commentary for July the 19th, Wednesday. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get it on. Not a whole lot of economic data across the pond, but here in the United States, we did get building permits, which is considered to be one of the leading indicators. I'd rather look at the housing starts, even though that's already what's done. Building permits, you can pull as many permits as you want, and doesn't necessarily mean you're going to actually build or actually use those permits. So anyway, it is a leading economic indicator, and it came in at 1.25 million building permits pulled, expected to be 1.2 million permits. And then the housing starts actually beat expectations at 1.22 versus the expected 1.16, and they revised last month's number up from 1.9 to 1.09, I should say, to 1.12. So in a sense, when we're seeing the housing starts ramp up and beat expectations, it's going to lead us to believe that they're actually using all of those permits, or at least quite a bit of them. Then we got the crude oil inventories here in the United States. We saw a drawdown of 4.7 million barrels. It was expected to be a drawdown of 3.6 million barrels. So bigger than expected drawdown. I mentioned this yesterday. If we saw another drawdown more than expected, I would expect that we would see crude oil inventories rally, and that's what we've seen. But it's really struggling to get above that 50 Fibonacci level right there, and it's still kind of in that downtrend. So it kind of is a bit of a tweezer top, which is both times it's gone up there. This 50 fib level has acted as a pretty strong resistance area. So that's yet to be seen if we can settle above that. That would be a big coup for the bulls if they got it up and settled above that 50 fib level. Then on to gold futures. Gold futures kind of unchanged for the most part right now. As a matter of fact, exactly unchanged as we speak. As the overall broader equities are rallying, that's going to have people kind of pull out of gold. Economic data is looking pretty decent as of late, so one would expect that the equities are going to benefit from that, and that the bonds would kind of suffer, as well as the broader commodities like gold and stuff like that, where that's more of a safe haven, as well as with the bonds. Bonds just up 2 ticks on the day. Did make a new high, but I think that this market's going to kind of start to look to roll over here pretty soon. So I've covered my TBT, and I'll talk about that here in a minute. But before we get on to that, let's talk about the equities. The Dow Jones is up about 26 points. Nothing to really see here, but I think the real limelight is going into tech right now. They're just pumping money in there. So it's really jamming higher, as you can see with the NASDAQ making a new historical high again today, and just blasting off to the upside, up 37 points. Tech sector is doing really well. Then we have the E-mini S&Ps also making a new historical high today. The E-mini S&Ps, albeit only up 9 ticks. This whole pattern here is just looking like it's not going to come off anytime soon, right? Unless there's some crazy data coming out, or some crazy rumors or anything like that. But right now, as you can see, well above the value area highs of the last couple of days, and shorts are on their heels as far as I'm concerned right now. Anyway, on to a few trades that I've done. Remember, I talked about this with Procter & Gamble. I was just sick and tired of dealing with this Procter & Gamble for the most part, so I decided to pull the ripcord on. I was tired of looking at it. It's not going anywhere, although it's close to the end of the expiration cycle. I didn't want to be involved in this going through the earnings and things of that nature. It was more of a get in, get out. I covered the August yesterday, as I talked about in the daily market commentary, for about a dime loss, but I was able to cover the September risk reversal for a decent profit. I mean, not actually for a profit, I should just say. Anyway, what I originally put on in there was the September, and I was long the 85 puts and then short the 80 puts and then short the 92 and a half calls and then long the 95 calls for that risk reversal. That originally got a credit of 2 cents for it. Got out of it. Had to the problem with that kind of trade is I had to leg out of it, but ended up legging out pretty good. I sold the 85-80 put spread, got a 59-cent credit, and then got the got the 95-92 and a half call spread for a 24-cent debit. So got another credit for that, 25 cents. All day 27-cent credit for that trade. Not a huge winner, but it was decent enough. And I don't have to think about Procter & Gamble anymore. IBM, this is a couple of the earnings trades that I did, IBM and UAL, which is United Airlines. IBM, I played it for the upside, but the volatility crush, as you can see, helped me out. Directionality wrong, but that still works out. You get the theta decay, the volatility crush, all of those things working in my favor. I can be directionally wrong and still be right, which was the case with IBM. And I tweeted both of these trades out. So if you're not following me on Twitter, at Wolfman's blog, do that, especially during earnings season. That's when I'm going to tweet those out, because I set those up at the end of the day, towards the end of the open market session, so that I can get those on as a clean number. With IBM, I was able to go in there and do the July 146 puts, which expires in just a couple of days, and I originally collected a credit for IBM of 85 cents and bought them back for 27 cents. So nice winner there, being directionally wrong. 146 puts. It was actually trading much higher when I got out of that. Like I said, these earnings trades, you want to get out early. It was trading around 149, kind of bumping up against this value area low, which was acting as resistance, and it started breaking below that into like the 148s. That's when I got out rather quickly, and now it's continued to go down. I don't know where it's trading right now, but I get out of those in the morning immediately, unless it's already a loser, and then you can kind of take that for what it's worth, and play around with it, whether you need to roll it out in time, collect more credit, depending on your assumptions. But this one was a winner right off the bat, so I get out immediately. I don't try and get 50% of my max profit or anything like that. It's just really what I can get out for is where I'm getting out, and I'm willing to pay up for that for a couple of pennies. It's not one of those trades where it's like, do I want the penny or the trade? I know on these earnings trades, I want the trade and get out. So keep that in mind. Then United Airlines was another trade that I put on for the earnings, and I did a strangle in there. I did the July 74 puts with the 83 calls to create that strangle. It's outside the market maker move, despite the fact that it's kind of come off a little bit. Now it was looking a little bit better, as a matter of fact, this morning as well. And I originally did that trade for 67 cents and was able to buy that back this morning on the open. I did it after the IBM, but bought it back for 44 cents. It started getting a little bit worse. I could have gotten it a little bit better, but wanted to deal with the IBM because I thought IBM was going to crater a little bit faster. Everybody seems to hate IBM beating earnings on the high profit margin, low cost products rather than the low profit margin, high cost products. I don't understand that. The service sector not doing so well, but their cloud doing very well, and that seems like the business model going forward for them. But for some reason, people can't let go of the fact that they don't want to be a service company anymore like that. Anyway, off my soapbox and on to TBT. As you can see here, TBT looks like it may have found a bottom. I think that if the equities start moving, bonds are going to go down, and if bonds go down, that means that TBT will go down as well. It's directly correlated in a sense because it's a inverse correlated product. But at the end of the day, did a nice little profit with TBT and got out of that one this morning. So I had on the August I bought the 37 puts and paid $1.02 for it. Was able to get out for $1.41 this morning. Still have on my put spread for TLT. That is a losing trade, and I'm probably going to ride that off into the sunset. Hopefully we can get a big move down in bonds, which should get my TLT to go in the right direction. So actually with TLT I have on the put spread, a shorter put spread in there. That's what it is. Actually, no, I'm sorry. I'm long a put spread in TLT, so I want the bonds to go down, which would help me with my TLT because that's directly correlated. Bonds go down, TLT goes down. So sorry about that. Anyway, so leaving on the TLT for the last couple of days going forward. So the next trades that I put on, these I put on today, and with General Dynamics, looks like it's going to be ready to break out of this consolidation pattern here. I'm looking for it to go back up into this uptrend, kind of consolidated sideways. So I got it as a long, actually followed one of Steve Primo's strategy number 4s. It's a confirmation to the upside, came down and tested the 50-day moving average. So looks like it's a buy. So I put it on a little bit small just to test out this theory, and went into the November, and I bought the 200 calls and then sold the 200 puts to create that synthetic long position. Paid a debit of $2.10. So as you can see, $2.10 on that was actually looking a little bit better, but break even's just slightly higher than this by about 15 cents. So I'm looking for that to pop and test at least this value or this trend line to the bottom side. So it will act as resistance. That might be where I look to cover it unless I get a big gap up in there. And then on to the diamonds. Diamonds being the lagger right now. We got equities in the S&Ps and in the NASDAQ making historical highs. I think Dow Jones is going to do the same. I think one thing that's really holding the Dow Jones back right now is IBM having that big down move. So that's kind of affecting the Dow Jones right now. So I think once that subsides, we're going to start seeing some move higher in DIA, which is the ETF for the Dow Jones. And with that, I did the same thing in a sense with the synthetic long for this, and went in there and bought the 215 calls and then sold the 215 puts, and did it for a debit of 65 cents. So bullish on both of those. Took off some short deltas that were kind of affecting my portfolio to make it more negative deltas. Now I'm long deltas in my overall portfolio, looking for a bit of a move higher here. That's about all I got for you guys today. Friday's webinar is going to be on the straddle with no upside risk. That's going to be a really good one, especially if you think the market's going to kind of stay here, trend sideways, kind of like we've done in the past here. Maybe it's going to move up, notch up, or you have a underlying that's got pretty high implied volatility and trending sideways. Maybe like that General Dynamics, that might be a good strategy for that particular underlying. I'm a little bit more bullish than that, but if you have assumption where it's going to trend sideways but are worried about a move higher, this is a perfect trade for that kind of situation. All right, so go to traderstrategies.com, sign up for that webinar. I hope you guys can all make it. Oh, one other thing, a couple of earnings things that I'm looking at for today. Qualcomm, Alcoa is coming out with earnings, Philip Morris. Those are the 3 that I'm actually going to be looking to put on. So on Twitter, I'll be tweeting those out if I do anything. All right, go to protraderstrategies.com, and if you can't take that, take it easy.